Hello, and welcome to 2.5 assignment, the mini case study for financial reporting and analysis 510 at Indiana Wesleyan University. My name is Kevin Randolph. A little bit of background about the problem. We are working with Parsi Onius, who is a buying manager, and he's charged with forecasting expenses for refrigerator production. He has forecasted that each refrigerator will use 11.22 pounds of foam per unit. Actual usage for the foam insulation has been much more. The forecasting provided fell short of $350,000 for the quarter, and Parsi is very worried about the over expenditure coming back around on him. And so he's asked for a little bit of help in explaining the accounting adjustment for the $350,000 to his superiors. So first, let's talk about inventory and cost of goods sold. To calculate our cost of goods sold, we're going to start with our opening inventory. Then we're going to add in any additional purchases during the time frame, and then minus out our closing inventory. And that's going to give us our cost of goods sold. What that's typically going to look like in the general ledger is, or in the journal, is going to be your inventory entry for the initial purchase. And that's going to affect your accounts payable, of course, because you're most likely going to be purchasing these on account as opposed to cash. Then your cost of goods sold, once it's been calculated, is going to be taken. You're going to add in the cost of goods sold to a debit on that account, and then you're going to subtract it out or credit it out of the inventory amount. Your T accounts for that are going to look like this right here. You're going to have your T account for inventory with your initial purchase, and then taking out of the cost of goods sold will leave you with your balance there. Your cost of goods sold is going to have just that one single entry, and then your accounts payable will only have your one entry for the initial purchase as well. Of course, you always want to double check your T accounts as you're going through to make sure that your accounting equation balances. So when we're adjusting an entry, as is the case with Parsi and his foam insulation for the refrigerators, we need to take into account any unanticipated additional inventory expense. And in this case, it's the $350,000. So now we're going to have 4 entries to the journal. The first 2 are going to be the exact same from before, the initial purchase of the inventory, figuring out the cost of goods sold. But now we need to do an inventory write-off expense for the over expenditure of the foam for the $350,000 here. And that's going to credit against the inventory account. And then once the refrigerators in this case have been sold on to the retailer, we're going to put that $350,000 as a debit to cost of goods sold, and then a credit back to inventory write-off expense. And when you look at the T accounts, that's going to leave your inventory write-off expense with a net 0 balance. And then, of course, you're going to want to balance out the rest of your accounts and ensure that you come back to 0 for your double check on your maths. So some suggestions for the future for Parsi would be to collaborate with manufacturing a little bit closer this time to determine the additional usage of materials not counted in the finished product. And basically what I'm talking about here is overspray. Like if you're spray painting something, you want to kind of go past the edge to make sure that you have a good even coat of that spray paint on your object. And I imagine that's quite a similar case here with the spray foam insulation that they're using in the refrigerators. Also, Parsi should collaborate with manufacturing on the small batch production runs to more accurately account for that overspray. And then finally, I really think that Parsi needs to pad his numbers that he gives to upper management. So if his calculations come out with manufacturing that he's going to use $400,000 worth of this foam for a given time period, then he needs to pad that number, maybe by as much as 10%, and tell them that we're going to use $440,000 or maybe even $450,000 of this foam. And then if he comes in on budget, on his original budget, his internal budget, if you will, then he looks like a hero to upper management because he's saved $40,000 or $50,000. So really just that's a better view of managing expectations for upper management than telling them that you're going to spend $400,000 and then you actually end up spending $450,000. Now you look like you can't manage your budgets, you don't know what your expenses are, and it's really just about managing expectations of upper management. Thank you so much for your time for this short presentation on Parsi's problem with refrigerators and inventory management. Have a good night.